Moving along to our crypto check-in. Luke, can you explain how realized losses and any other data that you're looking at suggest that we may have seen, the max pain in crypto? And are there any other data points suggesting Bitcoin around 20,000 may be the bottom?
All right, so so I think this question ties closely to what I told my subscribers in a crypto weekly update last
Mm-hmm.
Saturday, and I will also screen share this because I like
Mm-hmm.
to screen share today. Let the charts do the talking, not me, huh?
There you go.
So this is a chart. Oh, Aaron, you seeing it coming down your side?
Yep. Mm-hmm.
This is a chart of Bitcoin prices on the top, and then Bitcoin realized losses in the yellow bar, and then the bottom
Mm-hmm.
is Bitcoin realized losses as a percent of the total market cap of Bitcoin.
Okay.
Realized losses are when people actually sell and they realize a loss on that Bitcoin, on that transaction.
Okay.
Okay, so
Yep.
that's a realized loss. As you
Sure.
can see, realized losses tend to get pretty high during market bottoms. They peaked right here. This is the late 2018.
Mm-hmm.
They peaked right here. That is the COVID sell off.
Yep.
They peaked here. This is kind of a bit of an anomaly coming down. Uh, Big peak here. So that's realized losses. But the one that's a little bit more interesting is a bottom chart that is realized losses as a percent of market cap.
Mm-hmm.
Um, Normally, we're very low. We only break above 1% three times. Three
Mm-hmm.
times in the past, in the history of Bitcoin. Once was the bear market bottom of 2018. The
Mm-hmm.
other was the flash crash bottom of the COVID-19 crash.
Yep.
And the other time was just right now.
Mm-hmm.
So this is yet another. I mean, I've shown a sequence of charts to my subscribers, and I believe in these discussions as well, a sequence of
Mm-hmm.
charts which kind of continue to illustrate that we're at a max pain point. This is
Mm-hmm.
one of those charts. Another one of those charts has to do with something called the Puell multiple. And what
Mm-hmm.
the Puell multiple is it's an oscillator that compares the Bitcoin miner. So Bitcoin miners,
Mm-hmm.
how much money they make on a daily basis. The Bitcoin
Yep.
miners, they mine Bitcoin and then they make money off of it. What the
Mm-hmm.
Puell multiple compares is the daily miner revenue
Okay.
relative to the rolling 1 year average of that revenue. So
Okay.
basically, let's say it's like at right now it's at 0.42.
Okay.
0.42 implies that what Bitcoin miners are making today is 42% of what they made on average in a day over the past year.
Okay.
And let me show you now the chart of the Puell multiple. Let me know when it comes in.
Mm-hmm.
Okay.
Yep.
Bitcoin price in orange, Puell multiple in white. Puell
Mm-hmm.
multiple. You see right here, these breaks right below this 0.45, 0.5 level.
Mm-hmm.
Rarely do Bitcoin miner revenues reach below 50% of their rolling 1 year average revenues. When
Mm-hmm.
it does, historically consistent with bottoms. Here we
Mm-hmm.
have it early 2015. That was that bear market bottom. Here we have it
Mm-hmm.
late 2018. That was that bear market bottom. Here we have it 2020 flash crash. That was that flash crash bottom. Here we have it. We didn't really break below 50%, but we got darn near awful close in July 21. That
Mm-hmm.
was that bottom right here. And then here we
Mm-hmm.
actually broke below. We're at 42% now, 0.42, and that's where we are today. So yet another chart that shows we are at or at least very near max pain in the crypto markets, and that 20,000 is a level that should hold. I think that there is a very good argument for why this time is different
Mm-hmm.
because we're actually going into a recession.
Yeah.
Bitcoin has never been through a real recession. 2020 doesn't count. That was a fake recession. Bitcoin has never lived through a real recession. This time is definitely different. No
Mm-hmm.
doubt about it. Having said that, I don't think it is different enough to offset the growing mountain of evidence from realized losses, Puell multiples, the um, the average cost basis chart that I've shown before. From
Mm-hmm.
all those things, it's kind of like, well, that evidence is too strong to say that this time is different enough
Yeah.
for this not to be near a max pain point. So
Mhm.
I still think there is the possibility we
Yep.
break the 10 on Bitcoin. I still think there
Okay.
is the possibility that there is another 50% drop out there for alts,
Mhm.
but it's not my base case. My base
Okay.
case is that we hold around the 20 level. And again, you
Okay.
have to give Bitcoin wiggle room. You have to give cryptos wiggle room. You can't say, oh, we broke 20, time to freak out. Bitcoin is
Yeah.
so volatile. You got to give it plus or minus 3,000 each side. Okay?
Mhm.
So if we break below 17, for me, 17 is a level. If we break below 17, I'm like, okay, that's a little scary. Because now
Okay.
we're plus or minus 3% on our 20,000 hold. We broke below -3 of that. That's a little
Mhm.
scary. It looks like 12, 11, 10 is next. So that's where
Mhm.
I would start to get a little bit worried, technically speaking. But for right now, I think we continue to hold this range. I think we continue to consolidate because you have to understand we're going to get so many catalysts coming up. If things play out the way
Yeah.
that we believe they will, one, you're going to get a Fed pivot in the back half of 2022 or the first quarter of 2023. So
Mhm.
sometime between 4Q23 and or 4Q22 and 1Q23, they're going to get a Fed pivot. And what I want to show is actually one more chart of how Fed
Yep.
pivots do impact the price of Bitcoin because
Mhm.
we do have a precedent here. We do have a
Okay.
precedent for how Bitcoin prices are impacted by rate hikes.
Mhm.
And let me pull up that chart for you. I pulled it up. Now let me screen share. We do have a precedent for how interest rates and Fed policy impact Bitcoin. So we can see here, this
Mhm.
is a chart from 2018, 2019. This was the
Yep.
last time the Fed made a pivot on policy towards being more dovish, from going from hiking rates to either pausing or cutting rates. We
Okay.
can see here, you can see the chart, right, Aaron? Just want to make
Yep.
sure.
Mhm. Yep.
Throughout 2018, the Fed was hiking rates. Hike, hike, hike. We were hiking.
Yep.
Bitcoin was crash, crash, crash. We were crashing. Look when
Yep.
Bitcoin bottomed. Look when
Yep.
Bitcoin bottomed. Late 2018. What happened in late
Mhm.
2018? Fed stopped hiking rates.
Yep.
Fed went flat. Fed went neutral. Powell said sometime in here, early 2019, we're not hiking rates anymore. We're going to stay on neutral. We may cut. They ended up cutting later in the year anyways. But here, this pivot from hiking rates to going flat is what caused
Mhm.
Bitcoin to go from selling off to rebounding. This U-turn in the
Mhm.
market, this rebound from 3,500 to 10,000, basically a
Mhm.
3x gain, was catalyzed by a Fed policy pivot from hawkish
Mhm.
to neutral.
Yeah.
We have a precedent. So
Mhm.
you have that going on. You have the Bitcoin halving happening in the first half of 2024. Usually boom cycles start 12 months before the halving. So you're going to get those two catalysts coming together in late 2022, early 2023. I think those two catalysts are too strong to not cause cryptos to get into another boom cycle.
Mhm.
So what I'm saying is that I don't know what happens with a crystal ball between now and the first quarter of 23, but I
Yeah.
am pretty confident in saying that by the first quarter of 23, whether it's at 20 or 10, we're going to start a new boom cycle. And in
Uh-huh.
that boom cycle, Bitcoin's going to hit new highs. Ethereum's going to hit new highs, and certain high quality alts are going to hit new highs. I think the boom cycle is
Mhm.
going to look a bit differently because people have lost some trust in some of these sketchy projects. So not
Yeah.
everything, not rising tide, lift all boats situation, but it's going to be a rising tide lifts the strongest boat situations.
Okay.
And that's exactly what I think we're going to get in 2023, 2024, 2025. I think between now and then, between the start of that, we do consolidate, but there's a chance we break down. So that's why it's not time to get super aggressive, but rather time to just
Mhm.
be patient, 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 selective, 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 wait for confirmation of a bottom, wait for these catalysts to show up, wait for the Fed to come up with the cavalry, and then start taking more shots. That's where I stand with the crypto markets right now.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.